Yo. Okay. Nope. Okay.
Of the puzzle. Step 1. Getting price to trade into a higher time frame key level. Step 2 is waiting for price to open up a 5-minute bullish for
Okay. Hold on. Let's get out of this one really quick. Session. And Q. These are top steps. um what's it called? The top steps rules and shit. Count balance, put that at 50. Fuck does the advanced one do? Oh yeah, no, I'm good. Get rid of the volume candles. Holy, I was tripping balls, dude. I was like, what the fuck? Okay, Monday. Let's go that 1 hour. Uh, I mean, shit, we got one. We go. We got this gap up here. This one was already filled. We created one down here. Let's see the 4 hour now.
Value gap in the sense, since we're talking about price hitting a higher time frame bullish value gap, right? We traded into 1 hour, 4 hour bullish value gap. Now we want to see a reaction off of that and for from to open up a price time. So that is the first piece of the puzzle. Now for 4 hours, that means that if we analyze that price has been trading lower for a while and eventually we hit a, let's say, bullish key level. What is a bullish key level? Well, when I say if we hit a higher time frame bullish key level in this sense, I'm looking for a 1 hour or 4 hour fair value gap to get hit. And not just any 1 hour or 4 hour, I'm looking for an unfilled 1 hour or 4 hour fair value gap.
Okay, we got this one right here. The 5 minute, this is the 1 hour one, right? Yeah, this is the 1 hour one. Does this show up on the 4 hour too? Yeah, it did. Okay. Alright. Did this, trade it up.
A fair value gap that has previously not been traded to and now price is trading into it for the first time. So that is the first piece of the puzzle. Step 1. Getting price to trade into a higher time frame key level. Step 2 is waiting for price to open up a 5-minute bullish fair value gap in the sense, since we're talking about price hitting a higher time frame bullish fair value gap, right? We traded into 1 hour, 4 hour bullish fair value gap. Now we want to see a reaction off of that and for price to now open up a 5-minute bullish fair value gap. The reason being is that so many people will just see a higher time frame key level get hit like a 1 hour, 4 hour fair value gap and then just try to take any inverse off of this. They'll take a 1 minute inverse immediately after thinking, oh, well, that's enough confirmation for price to completely flip an order flow and start trading higher. But that's not true. Most of the time, price will just manipulate you and then actually start trading higher. Or you need to build more confirmation to actually establish this narrative as true. You can't just assume that price is bullish because it hit the 1 hour or 4 hour fair value gap. If you were to just take longs off the 1 hour getting tapped, it's probably like a 10% chance that it'll play out. Now, if you take longs off a random inversion after the higher time frame key level gets hit, well, now this is probably like a 20% chance that it'll play out. But if you wait for a structure to be created and start confirming this narrative that price now wants to be bullish, that's when you start taking higher probability trades. And you need to engrave that in your brain that this shit is all about fucking probability, bro. It is all about probability. So the way I like to build probability after price hitting a higher time frame key level is for price to open up that 5-minute bullish fair value gap. So now that price has opened up this 5-minute bullish fair value gap, we're going to use this as a reference to see if price really wants to be bullish. If price actually wants to flip bullish now after being bearish for a while and hitting this 1 hour, 4 hour bullish fair value gap, then we should respect this 5-minute and get an inverse out of it. But if price doesn't want to be bullish and this is just a simple reaction off of this key level, then it'll just invalidate this 5-minute and keep running lower. But that's bullish now after being bearish for a while and hitting this 1 hour, 4 hour bullish fair value gap, then we should respect this 5-minute and get an inverse out of it. But if price doesn't want to be bullish and this is just a simple reaction off of this key level, then it'll just invalidate this 5-minute and keep running lower. But that's why we want to see this 5-minute fair value gap get hit, because we want to start building this narrative that price is respecting bullish PD raise now and disrespecting bearish. It's as simple as that. So we wait to see if price trades into this 5-minute, respects it, and if it respects it and we get an inverse out of it, well, now you know the final step. It is execution. Now that we've got the inverse, we're ready to execute the trade. And how do we want to go about it? Our stop loss is going to be at the swing low that traded into the 5-minute. Our break even is going to be at the high before price manipulated down and traded into the 5-minute. We call that the internal high. The internal high serves as our break even point. And what are we going to target? We're going to target the next most significant liquidity pool, right? Let's say it's this buy side level up here, then we'll go for that, right? If you target a 1-to-1 or anywhere around there, you will have a 70+% win rate with the strategy. But if you do have a high comprehension of liquidity and overall just of drawn liquidity, then of course you can be a bit more discretionary with the strategy and target, let's say if this was like a data high, then we would target like a data high. But for the sake of simplicity, if you were to solely just target a 1-to-1 every time you get this setup, you would win 70+% of the time. And of course, this strategy works both ways. You can take it both ways, if you know what I'm saying. So by that, I mean, I was just showing you a long example, but let's say we wanted a short. What do we look for? Just vice versa. We want price to first trade into a higher time frame bearish 1 hour or 4 hour fair value gap. And after, what do we want? We want price to open up a 5-minute bearish fair value gap to confirm that this key level does want to be respected and price is ready to flip order flow. So now here we look for a 5-minute fair value gap to get opened up. And after this 5-minute gets traded into, if price gives us an inversion off of this 5-minute to the downside, then we know that we are ready.
All right, let's see. So right now I'm gonna try and, I've got two high time frame gaps marked out right now. We got two high time frame gaps marked out. Damn, price is kind of crazy. Yeah. So now I'm just gonna go down to the 5 and wait for something executable. Okay, so right here we got like a break of structure, right? So here. So if this trades below the gap, then if this disrespects it, then more than likely not, we're headed downwards.
ready to execute a fucking banger ass short. And I bet you so many people watching this right now are thinking, oh my god, this is so simple, how could this work? That's exactly why you're fucking unprofitable. That's exactly why shit isn't working, because you love to overcomplicate stuff. You love to just add in so many unnecessary concepts just so you can sound smarter, just so you can sound like you know what you're doing. But it is as simple as this. And what are we going to target, guys? We're going to target about a 1-to-1 or wherever the next significant liquidity pool is, which should be like about here. So anywhere between like 1-to-1, 1-to-2 is perfect. And our stop loss every time is going to be at the high or low that manipulated into the 5-minute. It is as simple as this. And of course, we always make sure to go break even in this case at the internal low. And yeah, 4 simple steps. Trade into higher time from key level. Price respects high.
Should go to the next day open.
Higher time from key level opens up a 5-minute fair value gap.
This is so weird.
So I'm just going to turn those off. Now that we're done that, we can close the news. And what I want to do is add an indicator. So I'm going to click indicators. I'm going to click FX replay. And then these are all our custom indicators that we have here. So I'm going to select the round number by FX replay. Now I want to skip to my session that I trade. So I'm going to click go to, select custom settings, and I'm just going to select the sessions that I like to trade. So
Ooh, I did not know that. Dope. Okay, let me go to the 1 hour. Got a gap. One second. Okay, we got this 1 hour fair value gap is open up here that price is trading into. Um,
Value gap in the sense, since we're talking about price hitting a higher time frame bullish fair value gap, right? We traded into 1 hour, 4 hour bullish fair value gap. Now we want to see a reaction off of that, and for price to now open up a 5-minute bullish fair value gap.
so the price trades into for the first time. I mean, got that one right there.
The reason being is that so many people will just see.
Let's go.
There you go, break even right there. Black, and TP smash. Simple as that. 2 for 2. Let's go on to the next day. Next day. Bouncing off this hourly. And now that we're bouncing off this hourly, what do we want to look for? We want to look for an inversion to the upside. Another one. 5-minute getting hit. 3-minute inverse to the downside. And same shit as always. Let's see if this one plays out.
Whoa, I missed something somewhere.
Ooh, a blue dinger. And this shit's packing more heat than me. You want me to walk around with a freaking dinger that looks bigger than mine? Whatever, bro. Anyways, you guys know the strat, right? Pretty simple stuff. You want to see price bouncing off a 4 hour. You want to see price bouncing off a 4 hour, 1 hour. You got that. Then bouncing off a 5-minute.
I gotta slow this down. I don't know if I'm like actually a slow person, but like I need to slow this down a little bit.
We got that. And then we want to see an inverse to the upside. Just like that. Right. You want to see price bouncing off a 4 hour. You want to see price bouncing off a 4 hour, 1 hour. We got that.
1 hour, 4 hour. Okay, bouncing off right here. All right.
That. Then bouncing off a 5-minute. We got that. And then we want to see an inverse to the upside, just like that, right? Simple, dimple.
Okay, we got this gap right here. Small, but it does not matter on the size, guys. Remember, size does not matter.
A gap in this sense, since we're talking about pricing. Simple as that. Nice little 1%. Really.
I bet. Now let me see how this have another gap that opened up right here. Hmm. Okay, let's go to the 1 hour. I see a gap. Going to take this bitch. Then I'm gonna go. Bam. Wait, what the fuck? Did I fuck that up? No, I didn't. Alright. A 5 fucking minute.
Really simple shit. So this is practically what I'm gonna look for the rest of this month of July. The 3-step simple strategy, the stupid simple strategy that everyone can freaking trade if they just use their freaking brain and I'll show you guys the end of the month results once I am done. Bang, we got it once again, bouncing off the 5 minute right here. We bounce off those higher time frame fair value gaps as well, inverse to the upside, and off this. Bang, we got it once again, bouncing off the 5 minute right here. We bounce off those higher time frame fair value gaps.
Alright, let's see if it retests this one right here. Oh shit. Damn. We're in like a massive gap right now, yeah. Gap inside the gap. Looks like we're gonna retest. So I should honestly fucking enter 2 contracts. Market. Shit.
Moore's law, inverse to the upside, enter off this, and you're just chefing, and it works almost every time. Obviously not every time. Sometimes it's gonna have to fail. So there you go, break even right there. Clack, and TP smashed. Simple as that. 2 for 2. Let's go on to the next day. Next day. The next day. Bouncing off the sourly. And now that we're bouncing off the sourly, what do we want to look for? We want to look for an inversion to the upside. Another one. 5-minute getting hit. 3-minute inverse to the downside. And same shit.
Right, and now we get our market structure shift, right? As you can see, that's pretty much it. That's all the concepts I use, and that's exactly what I do every single day, and that's what I've been doing for years now. That's helped me generate so much profit and cut out a lot of the guessing that I used to do. So now that you know all of this, that doesn't mean that you can now just go apply it in live markets right away, okay? You need to practice, and this is where 99% of traders go wrong. I'm telling you, if you skip this step, you will not get your funded account in the first try. You will not get a payout. So it's really, really important that you follow this step, because I see it all the time. People will watch a couple YouTube videos, they'll learn the concepts, and then they'll hop into live markets, or they'll buy a funded account, and then they'll blow it immediately because they haven't actually practiced it for themselves. So I'm gonna do you a favor and show you how to start practicing using these concepts and using this entry model, so you don't have to waste hundreds and hundreds of dollars. So the first thing I want you guys to do is to hop on tradingview.com. I want you guys to download TradingView. I already have this downloaded, but as you can see, you click download for Windows or Mac or whatever you have, and download TradingView so you can start watching the markets every single day, and you can also start paper trading with TradingView. So it's really important that you download trading. All right, the next thing I want you guys to do is to go on fxreplay.com. This is where you're going to be backtesting and practicing the model and the concepts that I've just taught you, okay? It's really important that you guys backtest. I used to backtest 1 week of data per day. This is what I did when I was unprofitable, and it's really what progressed me the fastest. So hop on FX Replay. As you can see here, it goes over everything. For example, here, your win rate, you can see your P&L that you've made over the years. You can go back to, like, for example, 2020 of January 1st, and you can backtest that exact day to see the model and see the concepts play out in front of you, okay? So it's really important that you guys backtest. You can refine your data, refine your model, see what you're doing right, see what you're doing wrong, and again, it's really, really important that you guys start backtesting. All right, so now that you've downloaded TradingView and you've been practicing with FX Replay, 1 week worth of data per day, it's now time to start paper trading, okay? So this is called forward testing, right? So you can go ahead and open up your paper trading account with TradingView right here, where you click on the trading panel, and then you click paper trading. This is your brokerage simulated by TradingView. Click connect, super simple. I am using this account, I guess, and I'm up this much, right? And what you can do here is actually just simulate you trading, right? Right now the market is closed, so I can't place a trade, but you can do exactly what I've taught you guys, and you can just place your trade, clicking buy up here, clicking sell up here, and practice your risk management, right? You can open up your trade by clicking here. This trade button opens up this order panel. You can set your take profits. For example, let's say I want to take a long right here, take profit up here, stop loss. Let's say I want to put my stop loss down here, for example, right? And you can simulate this entry, right? And this is not, of course, using real money. This is your paper money, okay? So how to actually really prove profitability before you go out and buy an eval or before you open up your live account. If you're gonna buy a funded account, simulate the rules that you have on a funded account with paper trading. So for example, right, with this account, let's create a new account, right? I want to have $100,000. Let's say you're buying a $100,000 account, okay? You do this, create a $100,000 account and paper trading account. Okay. So with this account, I'm gonna simulate basically a funded account where I don't want to lose $3,100, right? And I want to make $6,000. That's usually what prop firms offer with like an $100,000 account. So I would say look into the prop firm that you're looking to buy. Look at their rules, right? There's great prop firms out there. I use Apex, which is a great prop firm. I also use Alpha Futures, Tradeify, MyFund Futures, all great prop firms. Also, if you want codes off and any discounts for those prop firms, link is in the description below. All of them are great. But yeah, I do have codes for them. So if you guys do want to check all of them out. That being said, right? So simulate that. For example, you want to not lose $3,100 and you want to make $6,000 for, let's say, a $100,000 account. Okay. And if you can do that twice, if you can make that $6,000 twice without losing $3,100 twice in a row, right? Because 2 to make it true, then you are ready to buy your first evaluation. And I would say then you can buy your first evaluation. So you're not, you know, blowing a bunch of money. I see it all the time where people, again, will like learn some concepts and learn the model, and then they'll go into buying their first eval without even paper trading at first and without even back testing. So it's really important you start back testing, you start paper trading first before you even think. It is the entire foundation of ICT concepts. It helps you understand where the market is heading. Without structure, a lot of you guys will just be pattern trading the concepts that I'm gonna teach you, which is why it's so important to finally start understanding what market structure is. So I'm gonna show you now